Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, guys. Today I think we could take a look at the Canadian dollar. Since in the current week we mostly have discussed all major currencies. So yesterday we have checked on the setup on the Australian dollar. Also we have the double repo pattern in progress on the Japanese yen. So euro currency is our favorite currency, so we're watching over it most often. But currently Donald Trump inauguration is looming and market stands exciting, so they are so noisy and it's preparing for maybe some new information that could bring the inauguration speech. So yesterday, as you know, that Ms. Yellen has spoken on about the perspective of the economy, rating hiking and so on. So this was a bit more hawkish comments that maybe Fed will rise rates faster than it was anticipated, but mostly it will depend on the program of the Donald Trump. So what this program will be. As we said in the weekly research, we're hearing here and there as words as a stimulus, as some protectionism for American companies and so on, but nobody knows what really measures will be taken to fulfill this possible steps in new financial administration of Donald Trump. So that's why all this makes markets a bit exciting and expecting some big events. That's why currencies, gold markets a bit overextended in upward direction. So, and this brings a bit nervous action on the markets, and at the same time it brings lots of different setups that we will discuss. So today, guys, as I said, it makes sense to take a look at the Canadian dollar. This setup on the Canadian dollar looks a bit tricky, but I will explain why this is not an ordinary pattern and that we should be careful with it, but still it could work, and that's why I think that we need to use this chance to discuss this. Maybe this will be useful for somebody. So on the Canadian dollar, guys, actually we have the classical bread body setup with the Judd Napoli. So we have the thrust down. It's more than 8 bars, 1, 2, 3, 4, 5, 6, 7, 8, 9 bars, 10 bars to the downside. Market is closed above the 3x3 moving average and reached the major fib level, or even slightly exceeded it. Now it stands also on the weekly pivot resistance 1. So theoretically, when you see that setup, this kind of setup, you need to search the chance for taking the scalp short position, because existing of the bearish momentum here should slightly push market lower and force it to make the deep retracement. That's the idea of the bread body trade. But with particular this trade, we see some tricky moments that we should take into consideration, and that's why we should use some bit more strict rules to choose the point where to take the position and whether we should take it at all or not. This will be very important. So the major trick stands with this fast upward action. So when you're dealing with the bread bodies and you would like to take the short, you do not want to get such short action. Because taking the short position against this rally, such sort of action, is very difficult. Mostly because market, after this kind of upward jump, really could continue to move higher to the higher targets. So that's why the first thing that we should do is do not take the position blindly just because market has reached the resistance. We need to wait for some reversal patterns at this point on the lower time frame. So on the 4-hour time frame chart, guys, you see very important moments. As you can see by the action, this setup mostly matches to double repo pattern rather than the bread body. Why? because here you see classical market mechanics of the double repo pattern. Market stands in downward action, retracement, where new shorts were open. As you can see, this drop with the growing volumes. Of course, we see volumes only the FX Pro, but I think that's in general matched to the overall volumes that stands on the market. So we can see the growing volumes on the new sell-off is starting. It's really fast action. Market slightly has passed through these lows and taken out of these lows. That causes the wash and rinse by the Jet Napoli, grabbing the stops below these lows. Then you can see the classical turning action, very small range, the same as doji, but very great volume. That is the Jet Napoli calls as a squat. So others, the classical traders, usually calls this a churning, when a lot of assets turning the hands in a very tight trading range with a great volume. And that very often indicates the reversal point. This is some kind of the directional pattern as well, but you could see it very, very rare on the market. So, and after that, market is skyrocketing to the upside. So this indicates the failure of the bears. And that is the idea of the double repo pattern. When the bear is starting to push market lower, open the new shorts, probably breakout traders also have taken the short somewhere in this area. But they becomes trapped in the wrong direction. And when the market starts to move up, the stop starts to trigger and market is skyrocketing. That action mostly indicates the market mechanics of the double repo pattern. It makes really tricky to take the short position since this is upward reversal pattern. But by the shape, by the classical rules of the Jet Napoli have specified, this is not quite a double repo because we don't have the two crossing of the 3x3 moving average. Theoretically, if it would be the double repo, we need to first close above the 3x3 somewhere in this area, close below, the second close above, and that will be the confirmation of the double repo. But we do not have any closing above the 3x3 here. We have just single close above the 3x3. And by the shape, by the relation between the 3x3 moving average and the price, it shows the picture of the Brent bottom. That's why I think that it really also could work as the Brent bottom, because just the market momentum is still here and upward action against this momentum also here. That's why in general it could work. But the another reason why I have chosen the Canadian dollar today is just to show you it's very interesting indicators and how the market mechanics, how price action develops here from the educational point of view, from the understanding the core of the price action. It's very interesting. It's important. So, speaking on the upward target, you probably could recognize here some kind of even double bottom pattern. Okay, so usually double bottom reaches A, B, C, D, 200 extension. So usually distance between the neckline and the bottom counted in the upward direction. That's usually the target of the double bottom pattern. This stands 133.40 area. This, if we'll take a look at the resistances, that's approximately the 50% resistance, slightly higher. But it's also important because, as you know, the target of the double repo pattern stands precisely at the 50% resistance. So market could complete, for example, this, let's call it double repo, but actually we understand that this is the nature of the double repo, but in general this is just, let's call it double bottom pattern. So market could hit the double bottom target, complete this, and after that it could start the action to the downside, retracement, following the Brent bottom setup. Because for the Brent bottom, market should start downward action and reach important level within the 3 sessions above the 3x3 moving average. So here we have first session, today second, and tomorrow will be third. Within these 3 days, market should hit some important level. So we suggest this could be the 50% and then start move down. So that's the major idea. Currently, the target of the Brent bottom stands in 131.14 area, 15, so 618 support of the whole upward action. But here, guys, what we have to do is to watch for action here, because here, as you can see, market has reached 161 target of this A, B, C bottom, but we suggest that it really could reach the 133.40. That's why before taking the short, although the overall setup looks attractive and interesting, we need to drop our time frame to the hourly chart And here we need to watch for that top. What will happen here? If market will form here the double repo pattern right at some target at 1618 or 200% extension, that will be great. Maybe market will form here the butterfly and complete 133.40 area. It's also possible. Maybe some other pattern will be formed, but before taking the short, we need to get the reversal pattern in this area. Because as you can see, overall action looks really tricky and not quite bearish. It mostly shows the reversal pattern to the upside. That's why taking the short against this rally, it accompanied by the significant risk. In other circumstances, if we would get the clear, simple, ordinary bread butter, we could take the short here as the market has completed the extension to the upside, creates an agreement with the fib level. But taking into consideration these market mechanics that we have just discussed and this rally, it's better to wait for some clear reversal pattern here. But overall setup is not bad. I think that we could keep an eye on it and maybe we will get the nice trading signal here.